The market's dance has just begun. Lines and graphs, they tell the tale. Winners rise and losers pale. Options swing, the clock ticks loud. The screen's a storm, the trades are proud.
All right, folks, I'm going to cut this song short because we got pushed back a little late here by Lance and the Stockomania crew. We're going to get started so we don't lose what little time there is left in the trading day.
Dave, for me, the song is the best part.
Yeah, I know. I hear you. All right, how's everybody doing? Guys doing all right?
Doing good, man. Just watching this market. I mean, who's surprised that the market was up 30 basis points one trading session after, war? At this point, that's just par for the course, I feel like. But I do think, I talked about this on Opening Playbook, Kane. I think the cycles are just getting quicker and quicker. Like people are just learning, buy the dip, already priced in all, and then they start doing that. And then that's like a self-fulfilling prophecy to the point now that it's like all these one-day flushes and everyone already kind of starts thinking, hey, this is a reaction, buyer stepping in, so that it makes a cycle that maybe a while ago was 2 weeks of the market suffering and then having to recover, that now it happens in an hour.
Yeah, and you have a lot more instruments to capture that, right? All the 0DTE stuff,
right?
And a lot more options, a lot more names that are having daily or at least 3 times a week type of options. So you are for sure getting an acceleration of the cycles, but it also means that when the market actually changes, there's probably going to be a world of hurt when it actually comes. So we'll see how that plays out. I mean, I don't see that on the horizon yet. There are a couple things that we need to watch for credit, but so far it's inside the private banking sector and very small sector. So not expecting that to bleed out into overall markets just yet.
Yeah, I would say the same. Just to quickly go through our recap, because I do want to jump into some earnings trades. Actually, I kind of thought we maybe would be done with earnings trades, but there's like 3 or 4 that right now are having a pretty high market maker move. So might be fun to look at a couple of those and set up the old calendar spread and see if there's an opportunity. But quick review of where we're at. Pretty similar across the board. Big flushes across the board, big rebound across the board for the most part. Bitcoin got way ahead early in the day. It was down to open and then ran up quite a bit. So my Bitcoin trade looks pretty good right now, but I actually am trying to hold out for a little bit of a higher target on that one. I'll let you guys know if I end up getting out of there. Rafi asked about overnight. I didn't put out an alert yet, guys, just because the last hour has literally moved 0.5% in both directions. So I kind of just was going to chill here for a little bit, and then maybe at about 3:45, if we're calmed down, get the alert out. So just kind of holding on because of how wacky it's been over the last 30 minutes or so. Here's the sector view. Not what I expected the sectors to look like. I kind of thought, hey, we'll have a bounce back today. I don't think it's anything too crazy. I didn't expect them to look like this, where staples was down and healthcare, which has been strong, is down. Energy makes sense, of course, but technology actually up and kind of is what's giving us a little bit of a positive day today. So that one's a little odd, but needless to say, this market is kind of doing what it needs to do to stay in that range that we always talk about and to give us some bullishness. And it might be the fact that technology is up today might be more that because it's been weaker and then we had a little bit of panic that everyone just thought, okay, let me buy the undervalued stuff. And right now that is, NVIDIA and Microsoft and some of those names. So maybe that's just where that buying pressure happened to come in. But either way, quite an interesting looking sector map, I would say, after the news that we had over the weekend. In terms of getting into some actual trade ideas, there are quite a few earnings that have big expected moves. So let's just go through them, starting with Target. Target is priced right about correct, about a 7% move, and historically, that's about right. The only thing that I would note is that it has been trending down. Target was having some big, massive reactions going back. A lot of that was when the political stuff was happening and everything else, and has been slowing down over the last year. Hasn't actually beat the market maker move in the last 4 sessions. So I think probably a decent one to look at. Maybe we can price that one out in option strat here in a second. But that's a pretty big market maker move on Target. Plug, we're probably not going to trade because it's a $1.80 stock, but just to show you, it is also a monster expected move. Now, that monster expected move is 27 cents because it's a $1.80 stock, but you can see that actually translates to about a 15% move, which is much bigger than Plug has moved over the last couple of sessions. So if you wanted to trade Plug, I suppose you could. I just don't know what strikes you'd be trading with $1.79. As far as more tradable ones, BBY, another one with a big expected move. Again, pretty close to what we've seen. So I think that's priced pretty close. But over the last couple of sessions, it's been trending smaller and smaller moves. So again, I think one we can look at the calendar, especially with IV being a bit high right now, and see if we can even get a little more juice on BBY. And then we have AutoZone, which I have to check if this is right because that seems really high for AutoZone. It is showing here that AutoZone has like a $12 expected move or so. I didn't actually look at it yet. That is, sorry, when I say 12, I mean, I should say 200. Not 12. Yeah, that's about right. About $198 expected move. That is definitely not as high as this is giving us, but still nearly 5%. Probably the reason this is giving us an out of whack is because it's doing the strangle calculation, and on that expensive of an option is probably getting some pretty massive back and forth there because the AutoZone options are so expensive that it's probably getting a little off. But still, the average move there only about 3%. And we can see that historically is, I mean, AutoZone is not a big mover. So 3, 4, 0.7, 0.1, 0.2, 1.8. There are a couple, but mostly you're getting these sub 3% moves. It is coming off a bigger one in Q4, which is interesting. So we could look at AutoZone too. Now, obviously, it's gonna be expensive. It's a $4,000 stock, but we can look at that one as well. So there are at least 3 that are interesting. I am most interested in looking at Target, just because I think it's coming late in the season. It's already had a chance to react to some of the other names, and I think that one thing we have going for us here is that the volatility across the market is high, and I think it's probably going to try to hold higher. I don't think we're going to get a total VIX collapse, even if we get some bullishness tomorrow, just because there is a lot of uncertainty right now. And the next headline, of what ship is sunk or what new headline comes out is kind of right around the corner, and that's known. So I don't think we're going to get like a really quick volatility crush, even if it does drop to 20 with a good day tomorrow. I don't think it's dropping to 17. And so that might help us as well as we look at something like a calendar that's early in the week, and we kind of want that volatility to stay, as high as we can for the next couple of days. Let me start with Target here. And then, Kay, maybe I'll pass it off to you, look at a couple others while I look at my overhead option trade and try to get that out.
Sure.
Here's Target. It is showing about an 84% current volatility. Let's see if that looks about right. Maybe even a little low, actually, there. And so it's giving us a pretty big range, all things being equal, which they won't be. But all things being equal, it's giving us a really, really wide range here on Target. Now, the key will be if we get a kind of a nothing burger move right out of the gate tomorrow, and volatility is still, let's say, up into this range, we're still going to have some nice profit. But if we don't get that, and Target does make an initial move, that's fine for me, at least. I don't mind holding that and letting it kind of make a corrective move back. But the thing is, volatility is going to continue to come down. And so that range will get tighter over the course of the week. So always remember on these, we're kind of playing a timing and a volatility game where if we get that, that move that comes right back near our strikes, we want to take it and run, because as soon as we say, hey, I'm going to wait for it to come back, which is fine with me, we're starting to fight that volatility crunch and the time crunch with that trade. So this, I think, is pretty good to have, potentially what should be a 5, 6, 7% cushion in either direction and be in the 50, 60, 70% ROI. Again, it just depends on this, what this is going to look like tomorrow. But I think it's going to probably try to stay a little bit on the higher side because of how much uncertainty we have across the rest of the market. So let me go ahead and pull this over. And by the way, this would be similar to like the NVIDIA and the CRM, where if I do target and then I also do another trade, I want to keep the risk the same so that if we do get 100+% ROI winner, then we're going to be net ahead across both trades. So I have it right now at the 113 puts, and those are about 33 cents. So yeah, that's about what actually a slight amount more. So I like it at 33 cents. I got to plug it into my handy dandy risk calculator and see how many contracts I should trade here. All right, so that's about 15 contracts for me. And dropping down to 28. All right, let's try at 27. Let's try to get really low here at 27 cents. And I will let you guys know if that one fills. Might have to crawl that up a little bit higher to get filled, but I think that risk reward anywhere kind of below what Option Strat had us quoted here at 36 should be pretty good. You guys, you can do this on the call or the put side. I did it on the put. It doesn't matter. I normally at least check the pricing to make sure it's reasonably the same. And it's not. The call side mid price right now is $1.20. So something's happening in the skew there. Wow. Well, it'll be interesting to see if we actually get filled on the puts at a much lower price. Right now, that mid price is bouncing around, but it's staying steadily below 30. And as I say that, it jumps to 35. So we'll see. I'll crawl that up a little bit, see if I can get filled below 40 cents or so. If not, I won't chase it more than that. I think target again is priced well enough that I'm not going to say, let me chase whatever it takes to get into that neutral trade. I want to get a good enough cost basis, but I am going to shift gears here. A couple folks asked about the overnight option trade. Yes, it's coming. I just waited a little bit because the last hour of the market has been really wacky. We moved 0.5% in both directions, so I just waited a little bit longer to get it out. So don't mind me while I go quiet here for a minute and send this trade out.
All right. We can take a look at some other stuff in the meantime. So as Nate was showing you, we have a lot of movement in a lot of sectors. So not surprising, the ones that moved a lot. And what's really interesting to me over here, what a lot of people maybe are not seeing, is because in SPY, really we're kind of break even from Friday, which might be surprising to a lot of people, but we did have a large amount of intraday movement, and we're really stuck in this same neutral range. So what could possibly break us out of this is it's got to be something more systemic and something more sustained. So something that would probably cause us to move our interest rates. And the biggest thing on the table that could move interest rates is inflation. So the longer conflict drags out, the longer we block the ability for oil to move around, the longer that oil stays elevated, the more likely that's going to spill over and cause inflationary pressures. And then inflationary pressures would cause the central banks to start raising rates, or at least have pressure on them to start raising rates. And then that could start a recessionary cycle. That's the biggest danger that I see system-wide in the market at the moment. But of course, if the conflict is over very quickly, then that's probably not going to materialize. One way that you can see that is people are talking about oil. Of course, oil went up Oh, we got that huge jump up right there. We have gold, some flight to safety, not nearly as a big jump up. But what's interesting is DBC, okay, commodities. Commodities saw that huge jump up also, partly because there's oil in there, but other things other than oil are also jumping up, that commodity wise, because of this potential interruption in supply. So that's something that you definitely want to keep an eye on. And then what we also see is that of the normal 10-ish sectors that we concentrate on, XLI is still doing very, very, very well. And then XLU is still doing very well. The others are a little wishy-washy. So we saw XLK from Nate. We saw XLP. These are not, well, XLP is kind of sideways. But in terms of ones that are still maintaining their momentum in their trend, then we're looking at XLI and XLU. XLB, I don't think, not XLB. So really XLI looks the best to me. So I'd be looking for opportunities in there in the next 1 to 2 weeks. We can start hunting for so you could do XLI itself. I put a debit spread on XLI to the end of the week earlier this morning. And then if you want to look for individual opportunities, then I'd start looking in XLI, anything that is just really maintaining its trend. We don't want something that reacted violently to the news, but we also don't want something that basically didn't move at all. So GE is actually looking very good. All of these defense names are going to look like they jumped up or they gapped up. GEV is also looking pretty good. UNP is looking good. If that breaks out, we need to break out of the high today though. John Deere looks great. John Deere looks great. I don't know how liquid their options are though. So this where it gapped up on earnings and then pulled back and then just like a gentle bounce, not really, it's actually filled the gap and then bounced. You could say that it's reacting to the EMA 8, but really it just filled this gap right here and it's bouncing upwards. I like DE a lot. Let's see, I don't know. Earlier, a lot of the industrials were very gappy though. So we'll look on the monthly. Yeah, high dollar price, huge gap, bid-ask spread. So can't do DE. ETN's looking very good also. Very similar to John Deere. Not as strong, but it did cross above its MA200 recently and pull back. Not quite a retest of that, but a retest of this support right here. Right there. Yeah, you see how that it landed perfectly where we bounced from. ETN's looking pretty good too. Looks a little, a lot of tails here, so it's probably not that liquid either. Yeah. I think liquidity is going to be an issue, partially because of all the volatility. PH has been looking great forever, but it is super expensive. And then even the verticals are expensive. WM, great move upwards. I stopped myself out right here on this day, and that hurts because that was in my 5x challenge and it would have done really well, but I stopped myself out right there. Can you get filled in 5 minutes? We'll see. PWR is looking pretty good. PWR. As long as they're liquid, you'll be able to get filled. Yeesh. Yeah. Bid ask is just not great. Not great today. CSX looking excellent. Okay, better. Better right here. So do I want to go 1 week out, 2 weeks out? So Friday, let's see if we can do 42 for this Friday. We'll do it income style because there is a lot of volatility. So if I do this Friday to 42, if I do a 41, 42, no, that's definitely not liquid. Okay, so we'll do it at the money. It's 43, 43, 44. Then I don't want to do March 6th. I want to give it an extra week, March 13th. I do 43, 44. Okay, so that's a perfect 100% profit potential. So this was the CSX March 13th, 43, buying the 43, selling the 44, call, add a debit of 50 cents. Let's see if I can just grab maybe 10 of those. And closing playbook. See if it'll fill. There you go, got it at 45.
I'm putting it in.
Great, thank you. So I like to note my charts. The way I do it is I put a line at my expiration. And then not always, but generally I will put break even, max gain, max loss.
Sorry, it was a 43.44, right?
Correct.
Okay.
So you can see we do need it to move up. But, you know, we're right at that lower edge right now. Okay. So as long as it can make it to 43.45, I'll break even. It looks like it can do that in a single day based on the amount of volatility that we have. And then just has to make it another 50 cents, 55 cents to get into the max gain zone.
122% max ROI.
Yeah, great. Thank you. All right, anything you guys want to look at? Anything else?
I did pop that BBY, that Best Buy calendar in there too. I'm trying to get filled on Target. I chased it up about 38 cents right now. I don't want to pay more than 40, but it hasn't filled. And I'm wondering because that call price has stayed steady at almost double that, if maybe that's more an accurate price. And I'm not going to get filled on these puts.
Yeah, the liquidity, the bid ask is just really wide.
Yeah.
You doing it as a calendar?
I have it as a calendar. That one, the same one that you posted in there for Target, just not filling yet.
It looked, oh, I see it up there now. Yeah, I was looking at that earlier when I was looking at Target, but Best Buy seemed more like 50-50 on price action.
The ideal to me is sometimes to have two of the trades on, because then you kind of, just spread your risk a little bit. If one hits over 100%, it's nice that, you kind of guarantee yourself a net win across both of them. So I always like having two or three in the mix, but if we can't get filled, we can't get filled. I was going to try to get crafty with something on AutoZone and see if we could play it, but you'd have to, sell some credit, buy something else. Have to really do some work to get it to a tradable price. And I think by the time we do that, we're probably not setting ourselves up for as much success as we would like, kind of narrowing down the zone of possibilities. I do think that market maker move seems big, even at 198 or whatever TOS is showing. But again, unless you want to, build a $10 condor or something around it, which I suppose we could.
Well,
I don't know if there's any volume either at those strikes that are $200 above the price.
Yeah.
Plus we'd have to go out to monthlies anyway on AutoZone.
Oh, yeah. And then
so I mean, really, you're doing a lot of work to try to make a trade fit there.
Yeah.
I actually I went bearish on Target earlier when I was looking at what was coming up um for earnings, and I just went bearish with the vertical, and I was stingy. I didn't want to pay more. I didn't want to pay more than I wanted to pay. So instead of paying 2 extra cents, and I would have made 400% already today. But I didn't want to pay that 2 extra cents. So
Yeah. Yeah. Sometimes it
somehow
does
I feel
happen
like
that
I
way,
didn't
but
win that one.
you still gotta define, hey, was it a mistake that you didn't pay more? Was it the right thing that you just happened to miss out on? Because those are two different,
Exactly.
you know,
It's hard to feel
two
like a
different
winner
scenarios.
when you just see the parade go by.
Yeah. Yeah, for sure. Yeah, guys, I'm thinking that target price is just a bad mid price that it's showing on the puts, because there's a little more volume on the calls and they're literally double the price and have not really moved a whole lot. So I'm guessing, yeah, and it's literally gone from 26 to 32 to 42 to 61. So the puts are making their way up to meet the calls for dinner, and I'm guessing we're not going to not get filled there. Like I said, the other one that you could look at is plug, because the market maker move is huge on there. I just don't know what you're actually going to trade because it's $1.80 stock. So you could look at it, but probably not going to actually find a trade that makes any sense for it. We'll have to remember to keep an eye on it tomorrow and see what it does in the actual price action.
I've got one thing to mention, housekeeping, but if you guys have something else before the market closes, I don't want to.
I'm just waiting to see if by some miracle Target actually fills at that, because I crawled it up to 40 and don't have it. I'm not going to go past that. So I am assuming it's not going to fill in the next 2.5 minutes, but that's the only thing I have waiting right now.
Kane, you got anything
Nope,
you want to
no,
squeeze
go
in?
for it.
All right,
Go for
I
it.
mean, this is just basic, but I didn't want to take the last 3 minutes of the market day. So
Well,
Frank
and just
wrote
like that, Target filled, by the way. 40
Nice.
cents. After I just said it's definitely not going to fill, it did fill at 40 cents. So if you guys have the puts, should have got filled, I think, just now.
I'm not superstitious, but there's something about you specifically saying things out loud that just does it. I don't know.
Oh, well, actually, let me say something else out loud. Actually, it filled one of my 15 contracts. So I guess we're right on the edge here if it's filling one of the contracts.
We've dipped our toe in the water.
Yeah.
No, I was just going to say, Frank said that Graham posted that there was a new lotto board trade available, but he can't find it in one click. So I just want to make people aware of this, and this is not just for the lotto board. One of the ways that we let you guys know when stuff's happening, when something gets added to the members area, is that we put what seems like an alert out on it. And you'll get an automated message from one click that there's a new alert, but it's not always a trade alert. It's an alert that there's a meeting tomorrow for Lotto Board. So if you go into the Lotto Board members area and you click on alerts, you'll see that there's a new announcement in the alert section. So there is an alert, but it's just not a trade alert. But we only do that when it's something that's we feel is important that everybody should see it. So if you're a member of Lotto Board, you'll want to know that there's a live masterclass tomorrow. So we put out an alert on it. So that's what that is. So if you get those, if you ever get a message in your email or text message or Telegram that there's an alert and you go there and you don't see a trade, just double check that there isn't some other kind of alert in there, like a meeting message or something else. Popeye wants to know if you're doing a Maverick Pro workshop anytime soon, Kane.
Thursday, toward at 1 p.m.
Yes, I did get out the overnight trade. As soon as I got it out, the SPY did pop about 0.1%. So I'm actually not filled on mine. I'm still waiting. I'm 2 pennies away. We do have till 4:15. I wanted to wait a little bit for the market, and I especially don't want to chase the market on a day like this. So if we literally just don't get filled on overnight options, it's an OL kind of day. I have my limit in for exactly what I sent the alert for. It hasn't been filled, and if it doesn't get filled, then oh well. This is not a day that certainly I want to chase it. We have 15 minutes from right now. The bell just rang, and we'll see if it gets filled. Sometimes we will get that. As a matter of fact, SPY is dropping right now a little bit after the bell. So we might get a post market fill here, but don't want to chase that one. I want to keep as much cushion as we can on that particular trade. Okay, I guess not a whole lot else right now. This is kind of a setup day to see just what this market is going to do. I think it was actually a semi-optimistic day, all things considered, but we're still definitely in the range. We'll keep showing that range, and got a couple more. Kane, we did another iron condor this morning. Just kind of stacked out
Nice.
another one just to see. Hey, that's what we can trade right now. We'll set them up. One of the things that we looked at, especially with volatility being a little bit higher, is we went from same exact range, that like 7,000 to the 67, whatever our number was, 6760, I think it was. Same range. We could get like 65% ROI for Friday expiration, but being willing to take that weekend on and go into Monday, it was like 110% ROI.
Wow. Okay.
And so one of the things I'm wondering, I'd love to see it kind of in the middle of the range on Friday and see if it's actually worth more than the 65% Friday by going to that, especially if volatility comes down at all. I think it should be.
Yeah. That'd be interesting to track for sure.
So yeah, I gotta remember to actually to look at it on Friday. But yeah, just again, keep in mind, I know we've said this a lot, but those, iron condors are great for the current market. It seems dead set on being in this range, but you just got to be careful with the risk management there. You don't want to keep stacking it up and rolling it, because eventually it's going to break out, and then that trade's going to suffer when that happens. And I don't know what the catalyst will be for it to break out. Clearly, foreign conflict is not enough. I would tend to agree with Kane that something more fundamental to the financial system probably has to happen in order for us to really get the catalyst we need for this market. And there's a couple different ways that could happen, including I was a little bit checked out there, but Kane, I think you said including some downstream effects from the war, like if we get
Right.
some embargoes and some straits cut off and things that then impact inflation and then impact interest rate expectations. So it could still be a downstream effect, but I think it has to actually get to that effect before the catalyst registers.
Yeah. It's going to be a little bit of time. So if this thing blows over in a couple of weeks, then we're not going to see that.
Yeah, right. And one of the things that I'll be interested in, and I do like to short the VIX when it's high. I'm going to be a little more patient doing it now because we have what will probably be a series of potential VIX hikes and headlines. So like headline number one happened and VIX popped up. I think it opened at 25 and it came back down some today. And so I really like shorting the VIX when it's above 20. But when something triggers like this weekend, I would also typically expect that there will be a series of headlines that will create other VIX pops. And so in my opinion, if you say, okay, I think the VIX is going to come back down below 20, yeah, probably, but you're also just kind of guessing on timing of when that next headline is going to be. That, next week you have the Wednesday expiration, but Tuesday, troops are deployed. Like whatever happens, you're just kind of guessing on the timing of the next thing that's going to happen in an environment where we're probably going to see spikes and valleys. So for me, that's why you probably won't hear me talk about doing the short VIX trade for a little bit longer. Just kind of seeing how the roller coaster goes between, now and when either we establish, hey, we're in this thing, this is what it is, this is the new normal, or we're out of this thing and it's over. PJ asked if 75 is too much. Well, 75 is the max in our rules. So if you watch my masterclass, 75 cents is the max. I don't like paying the max. So like today, for example, I just didn't get filled. And if I get filled in the next 11 minutes, fine, good. I'm happy to get filled. If not, then I'm just going to pass on it because I want to be very sensitive to that risk reward. And in a market where I feel like I'm chasing it and the conditions are, a little messy like they are now, then I want to err on the side of not chasing it. Phil, yeah, I'm actually going to do a whole class on that probably Thursday. I'm going to do all members, but it's going to be more geared toward Income Machine folks specifically. And it's going to be very geared toward, analyzing movement How do you kind of objectively measure what is a good cushion versus what is not a good cushion? All right. Well, I think we churned through most of those questions. I guess other than that, we'll see what tomorrow brings. I mean, it's going to be a really interesting, week, not just because of headlines, but because we're in this range, we're watching this range, and we're seeing, okay, we've got the headlines, we've got all these other catalysts. Does that do enough to actually move the market? Does that actually do enough to change the price? Or are we just playing this volatility game all over again, where it's up and it's down, but the price isn't really doing anything substantial from a structure standpoint? So should be an interesting week from that standpoint. Kane, I'm guessing we're going to say lots of things like income, defensive, iron condors.
Yep. I mean, it basically the main, so you got to understand what's moving market and what's moving the price of what you're trading, which is options in our case. So if it was just equities, then it's like, okay, price movement. But with the options, it's like, is the underlying price, is it volatility? Is it time? What is it that's actually moving the price of my options? And this week, it's most likely going to be that volatility component.
Yep. So we will try to take advantage of that. In the meantime, premium on risk control and risk management. Don't get crazy predicting the breakout, but also don't get crazy predicting that it's not going to break out. It might sound oversimplified, but that's kind of what you got to do. Be consistent in your risk management and try to take advantage. I think right now is a great discretionary market to be trading. Kind of find your levels, be defensive within those levels. Like Kane said, when volatility is high, try to look for trades where volatility coming back down is to your advantage. If volatility shrinks back down, pretty good chance we'll get some volatility increase because there's so many headlines and catalysts. So maybe take advantage of things where a volatility increase will help you, like calendars, for example. So just kind of playing that discretion right now, I think is a good opportunity. And as always, I'm still going to trade my mechanical stuff, but I'm just going to, put a focus on risk control and know that my job right now is just to kind of hang in the game. Hang in the game when conditions are not ideal and take full advantage when conditions are ideal. So hopefully that's helpful. And as we get, deeper into the week, we can map out more specifically where things might go, structure trades accordingly. And speaking of structuring trades, I know you guys have probably heard because I've been talking about it with Graham for the last couple of days. But I told him we would play his lotto board presentation one more time for him today because that's kind of the new fun thing that he and I have been talking about a lot. It's not a me thing; it's a Graham thing. For those of you who are wondering, but I've got to participate in it and kind of be behind the scenes, and so we worked on it a little bit together, but of course, giving Graham full credit. It's definitely his baby. And if you guys haven't seen it yet, we'll play that presentation here for anyone who wants to check out the lotto board.
You sure you don't want me to just hold it freeze framed on that picture of you?
Yeah, that's really nice. Yes, please just keep that there for all of these people to look at. 0.9% win rate on home run trades, just insane. 143% is the average return, folks. That's the winners and losers combined over 10 days, with the average winner of 224% and the highest profit factor I have ever seen in my career right now at 10.45 on those real money trades over the last few months. But of course, bound to be winners and losers. This is a tool for traders. It's not a trading service. So of course, your performance is going to vary on how you use the tool. Trade at your own risk. Again, let's just double and triple down here so everyone's on the same page. We have seen this tool produce really big wins, and that's by design. It's looking for those huge 500, even 1,000+% potential lotto-like setups. That's why we nicknamed it that and has become the real name. And so, of course, there have been some of those big Grand Slam results in the past, but keep in mind, not every trade's going to end up being that big. Plenty of trades are smaller, 50 to 300%. Average win 224, and then of course there's some losers as well. That should be expected, and we're